Customs processes commence with a declaration. Now, in our legal framework, a declaration is done by the importer. Now, the process starts with you. We call them self-assessment. Now, in the East African Community Customs Management Act, you can only declare cargo either for home consumption. Now, I know these are some of the terminologies, or transit, or warehousing, or transshipment, or export processing, so on.
But if you look at what the court judgments talk about, most of them, in fact, if not all, are saying that URA did not demonstrate why they moved from the first method to the last method.
And again, also him as a tax collector. These consolidators, I think, we are really getting a lot of money from the clients. And I mean, we are taking advantage of the ignorance of most of our importers. But now that URA has come in streamline, if a trader leaves Kampala to go to either Dubai or China, they will insist, I want my documents, they should be in my names. If I pay, I should have evidence of payment.
Good afternoon, everyone, and welcome to the Tax Hub podcast, a platform where we discuss pertinent tax issues that affect people in Uganda, individuals, businesses, investors, and so many others. My name's Bekeka Vanessa Irene Moneza. I work at AF Mpanga Advocates as a senior associate in the tax department, and I'll be your host today. Today's topic will be diving into customs. Customs is the gatekeeper of our borders, of the borders of Uganda, and owing to the fact that international trade is the engine that drives economic growth in every country, customs lies at the heart of international trade, which is why we found it pertinent to have this discussion. So whether you're importing goods, you're a musubuzi, you're a wholesaler, whether you're importing raw materials for manufacturing, or you're exporting finished goods or semi-finished goods, this topic is just for you to understand your tax obligations, your rights, that everything to do with customs. Joining me today is a very stellar panel of brilliant minds from the private practice, from the public sector, that are going to disintegrate this topic for us today. So allow me welcome Simon.
Thank you very much, Vanessa. My name is Simon Esunget. I work with the Uganda Revenue Authority as a manager customs. Currently, I lead a team that oversees the valuation of all imported goods into the country under what we call the Document Processing Center. I've been in customs for the last 16 years, and I've served a couple of units, and I've been in various borders, including Kenya. I've been in Nairobi, overseeing areas of Western Kenya, Kisumu, Eldoret, Nakuru. And I've also been at the one-stop border points like Busia one-stop border post, Mutukula, Katuna, and a number of other entry points into Uganda. So I'm glad to be part of this conversation, and we hope to share our experience and also share knowledge on matters related to customs. Thank you.
Thank you, Simon. So exactly how they say, hearing it from the horse's mouth, the kind of experience that this panel has is one to die for. So I'll move on to Charles. Please introduce yourself.
Okay, thank you, Vanessa. My name is Charles Mwebembezi. I work with Africa Global Logistics. This is an international freight forwarding company, and it is an associate to Mediterranean Shipping Company, one of the biggest companies in the world. I work as a customs relations manager, and in addition to that, I'm also an industry leader. I'm the chairman of the Uganda Freight Forwarders Association, and also at the regional level, I'm the president of the Federation of East African Freight Forwarders Association. I started my work in logistics from customs. That was a long time ago when URA was starting. moving from Minister of Finance. And later on, I joined the private sector, and I have worked with a number of international companies. And currently, like I said, I'm with Africa Global Logistics. Thank you, and glad to be here.
Thank you, Charles. When I grow up, I hope to be like you and have such a CV. But thank you for honoring our invitation today.
Yeah,
I'll move on to Stuart. Please introduce
Vanessa,
yourself.
it's very hard to top that. Yeah. Okay. Thank you, Vanessa. My name is Stuart Mulabi. I'm a tax manager in the Deloitte Tax Uganda Limited. I work in the tax controversy team. So controversy deals with a number of activities that involve handling various URA engagements, one of them being customs. I've had the pleasure of representing a number of multinationals during a number of customs engagements, customs audits. Some have gone as far as tribunal. So yeah, looking forward to fruitful discussions today. Thank you.
Thank you, Stuart. So we'll dive right in, yeah? So I'll start with Simon. Simon has 16 years experience in customs. Would want to understand what exactly is the mandate of the customs department at URA. I understand it plays a dual role in revenue collection, but it also has to facilitate trade. So could you walk us through that? Help us understand.
Yeah, okay, thank you very much, Vanessa. Customs globally has 4 broad objectives that it pursues. Uganda Revenue Authority Customs Department, in all its operations, must ensure that these 4 broad objectives of customs are achieved. The first one is protection of society. This is basically to mean that whatever is coming into the country or entering into our borders is safe for the society in Uganda. Now, customs being the people who man the borders, they must ensure that we protect the society from any harmful things from coming into our country. Now, for that reason, the powers of a customs officer extend to being a police officer. So we can actually be able to arrest anybody who is found to be violating, the laws in the country. The second one is collection of revenue from internationally traded goods. Now, every country must always be able to set tax policy measures. And through customs, you are either able to regulate certain imports coming to the country using tax policy measures. Now, that one, if you want to, for example, encourage importation of particular products, so you lower down the particular tax rates. But if you want to restrict, then you increase the tax rates. So customs plays that role to ensure that, yes, on top of the protection of society, also revenue from international traded goods is collected for the country. The third one is what we call the collection of data from everything coming or living into the country. This is very important for planning purposes, but also for trade agreements or negotiating agreements internationally. You're able to tell what comes from whatever country to your country or what you are exporting to a particular country. And that is very important for every country. Now, the first one is a very critical one. It's called trade facilitation. And in this, we mean legitimate trade facilitation. Now, customs, in pursuing these broad objectives, must simplify the processes that the individuals or the taxpayers go through in order to comply with importation or exportation rules. Now, some of those processes have to be made simpler for the people to comply. I have just mentioned that we collect taxes. So in trade facilitation, you make the process of collecting taxes much easier and convenient for the people who are importing or exporting. Now, within the Uganda Revenue Authority, and this has been a growing trend, in trade facilitation is taking a center stage. Now, these 4 objectives that I've mentioned, every country implements them or emphasizes them based on their basic strategic national interest. Now, you'll find some countries, what they emphasize in these four broad objectives is societal protection. So you find countries like in America, they're already developed. So for them, they are concerned more on the safety of their society. So you find their controls in customs is to ensure that their society is safe. While you find some countries like Uganda, customs also must be a source of revenue for the country. But generally for developed countries, customs has more to deal with the trade facilitation, to facilitate importation of raw materials, machinery for production internally. So you find for the developing countries like Uganda, when customs plays a key role in revenue mobilization, it means it is one of those key things that in those four broad objectives that it focuses on. For example, in our country, customs contributes over 30% of the revenue, which is showing you that the composition is not like some countries in Europe. Taxes contribute as less as much as around 4%. So their focus is on raw materials and machinery for production in their country, and not necessarily tax collection. So you will realize that in every customs administration, those four broad objectives are focused on based on the strategic goal and direction and the level of development each country is at that stage. Now you realize that for us as Uganda Revenue Authority and generally all the other countries, they must achieve those core objectives in every transaction that relates goods crossing the borders. They have to protect society. If it is the issue to deal with the tax, they must comply. Then they must be able to collect data from that transaction. But also, if it is the issue to deal with the complying with all those things, then it must be a simplified, transparent, simple for the people to comply. So broadly, that is the focus of the Customs Department in Uganda Revenue Authority. Thank you.
All right, thank you, Simon. Just to, again, for clarification purposes, as you exercise that mandate, I would like to understand if I have a tariff classification issue, who do I go to under the Customs Department? If I have a documentation issue, if I have an audit issue, could you just break that down for us briefly?
Okay, thank you. So in order to achieve those broad objectives, Customs Department is divided into what we call divisions. Now, these divisions are structured in such a manner that it is aligned with those core objectives. For example, we have what we call trade division in the Customs Department. And that's where you find the units such as classification or tariff unit. You find a unit such as refunds and reconciliation. You find a unit such as valuation unit under that division of the Customs Department. Mm-hmm. So basically to say a majority of the disputed issues will have to be addressed within the unit of Customs Trade Division. Now we have other divisions such as enforcement and border control. Basically, they are the ones to make sure that if you want to enter Uganda through a panya, we stop you. So we call it, their focus is to detect and deter. That's customs enforcement and border control. But now we also have the other divisions like field service where I fall in. Field service oversees all the operational aspects of customs. They mans all the border entry points. He mans the day-to-day activities of imports and clearance of goods or exports. We also have what we call the external operations unit. Now, Uganda and East African countries, we launched what we call the single customs territory. Yeah. Now, we are present in Mombasa. We are present, I mentioned earlier on that I was heading the Nairobi and Western Kenya. So we are also present in all those locations. We are present in Dar es Salaam. So you realize that we also have a division that supports what we call single customs territory. Now, the other division is what we call the risk management division. That is where you find aspects of post-clearance audit, aspects of arrears management fall under the risk management unit. So basically, that is how we are structured. And you can see that it is structured in line with supporting the achievement of those core 4 broad objectives of customs generally. Thank
All right. Thank you, Simon, for that. Has been very insightful. I'd like to bring in Charles just to point out that custom agents play a critical role in the ecosystem when it comes to trade facilitation. They bridge the gap. So, how would you describe their role or relevance when it comes to trade facilitation, cross-border transactions?
Okay, thank you, Vanessa. Customs agents, their existence is actually within the East African Customs Management Act, if I am not mistaken, Section 145. And under such section, the Commissioner of Customs is mandated to appoint and license customs agents. So you don't wake up one day and become a customs agent. And what does the commissioner look at? You look at several things. You look, of course, at the training. Are you trained for the job you are going to do? Are you registered? Are you? Do you have a permanent place of abode, like an office? And then they look at the moral integrity of the managers and directors of those companies. The rationale is that you are going to handle functions where you'll be reporting to the commissioner. And you wouldn't do that unless you are appointed. And for your own information, if you don't fulfill a certain obligation, then you might not be relicensed. And what do agents do? In a nutshell, agents actually work as a link, a connecting link between the business community and customs. So what do? We, of course, we have our clients, and if we have a clients, we have a responsibility to interpret to them the documents that are used. We help them to assess taxes. We help them to pay the taxes. We help them to follow up with customs until the cargo is released. And in the process, we also interact with other government agencies, leave alone URA. We also deal with other agencies like the Ministry of Agriculture, Ministry of Works, NDA, UNBS, all those agencies. So that's our mandate. And in the execution of our mandate, like I said, we need to be professional. And as such, what as an association we have done is to encourage, we have courses. We have a certificate course, which we have been running for over 10 years, and we have already had churned out about 3,000 agents. Of recent, we introduced a diploma, theater diploma. This is an international diploma, whereby we don't want people to remain at certificate level. And secondly, the other one is an international diploma. So agents can work everywhere once they have those qualifications. Yeah.
All right. Thank you, Charles, for that. So basically what he's saying is customs agents are indispensable. You cannot do without them. Yeah. And you definitely have to be certified to be a customs agent. So bring it back to Simon real quick. Considering your experience, you mentioned you've worked at different borders, you've been at the airports, you've been in Kenya. Would like to understand the processes that a taxpayer has to go through at the entry and exit points when I import my big consignments. What am I supposed to do? What's supposed to happen? Yeah.
Okay, thank you very much. Maybe just before I dive into the processes, I would like maybe to add a little to what Charles mentioned about the customs agents. We call them licensed customs agents. And they are very knowledgeable people. They are trained and they help taxpayers to comply with the tax laws. So, for example, when you talk about classification to somebody downtown, he doesn't know what classification means. That's why the clearing agents come in, because they go through the training in order to achieve to support such traders. But now back to the question, customs processes commence with a declaration. Now, in our legal framework, a declaration is done by the importer. Now, the process starts with you. We call them self-assessment. Now, in the East African Community Customs Management Act, you can only declare a cargo either for home consumption. Now, I know these are some of the terminologies, or transit, or warehousing, or transshipment, or export processing zone. Now, when you make a declaration, you make that known that I'm declaring this cargo for home consumption, and that triggers the next processes in that line. Now, if we are declaring, for example, home consumption, the next thing is to go to the bank. You pay the taxes. That's a bit, you have assessed yourself. Now, that triggers the other processes. Once you make the payment, the law says the declaration is only acceptable when you have gone and paid the applicable taxes that you have assessed personally. Now, once that is done, we trigger what we call risk management engine. And that we have made it in a simple manner. I think Charles can now attest. Unlike in the past where you would have to work with a fiscal file to URA officer in order to trigger that selectivity. Now we have done it automatically. It takes between 15 seconds from the time you make a payment, about 15 seconds, and the risk management engine will be triggered. Now that will determine which lane your cargo will be cleared. If it's a red lane, then it initiates what we call a fiscal verification process. If it's a blue channel or green channel, then you go to access your cargo, what we call the exit process. Now, if you go to a yellow channel, then it comes to document processing center for us to examine your documents and make a decision whether those are appropriate declarations or not. If we need to collect additional taxes, then we'll let you know that we have identified the following issues with your declaration, and the implication is that we are going to collect some taxes. And in most cases, then we have also identified associated offenses in that direction. And then, of course, if it went red lane, it will go through a verification process. After verification, it will be rerouted to yellow, in which case the cargo will move again to document processing center. So we are going to look at the verification report vis-a-vis your declaration, and then the documents that you have availed, and make a decision. Now, what is the meaning of these different lanes? These are various risks that are associated with that consignment. If the risks are so high, either in terms of protection of society, either in terms of revenue or other risks, then that is what determines the lane your cargo will be cleared in. Now, of course, we have other processes such as what we call offense management process. If you have been identified to have violated any customs law in the process of clearing your cargo, then we initiate what we call offense management process. And that begins again with you expressing interest that we should manage that offense. Otherwise, we will take you for prosecution, and then that will be settled by the courts of law. The other processes, like for example, if your cargo is coming from the region, say Kenya, Tanzania, or from the port, once we do the release from the document processing center, the next process is for you to initiate what we call an exit. Now, that triggers data migration process, because now under single customs territory, you declare cargo once in Uganda if the cargo is coming to Uganda. And then through what we call system interfaces, the data will be transmitted to the other revenue authorities. So quite in that stage, you're able to have your cargo cleared across all the revenue authorities through just a single declaration. In the past, you will need 4 declarations in order for you to reach the border. But now with only 1 declaration, you can actually pay taxes for even 1 million liters of fuel with just 1 declaration. So that is the other process that follows. So in all this, we are able to serve the clients, but also you get to learn that one process leads to the other. And how well you execute one process determines how soon the next process kicks in. So in a nutshell, those are the key process that you go in. You begin with the declaration, go to the bank and pay, and then the risk management engine will be triggered in order to determine the lanes through which your cargo will be processed. You go into the document check. After the document check, you get a release. And from that release, you're able to now initiate what we call an exit function. And once that one is done, you're able to move with your cargo. If you have been found to be non-compliant, you go through the next channel, which is offense management process. After the offense management process, then you come back to the right channel until you're able to get your cargo out of the customs control. Yeah, thank you.
All right. Thank you, Simon. That's very, very, very insightful. I'd like to move on to Stuart. So let's get a bit practical. Simon mentioned that you do a self-declaration. Yeah. So what are those key documents that every trader should know that if I'm importing, I have to have A, B, C, D, and this is what I'll use to make these declarations. This is the evidence I'll provide to the URA Customs Department.
Yes, thank you, Vanessa. So I think the best way of approaching that would be then to look at the basic procurement cycle of any institution. Now, if you look at procurement normally begins with creating a need in terms of what's lacking in a business. So in most cases, you'll find that a company will then invite maybe for bids or orders bids from various suppliers. Now, you'll find that the companies who have global presence, that they have they have purchasing units in different countries, but then I'll first focus more on the basic trader. What do they do? If you have a supplier in China or India, in most cases you maybe go on your phone or by email and you ask them to give you a quote of for what you need. Say if you need maybe chairs, if you need maybe tables, then they'll give you like a quote that, see, we have this much at this much rate. So that then is going to bring in the first document, which is the pro forma invoice. Because now that shows what they have and maybe at a particular rate. Now, moving on from there, then you could be having discussions, haggling maybe, and then they give you a discount. Now, I'll first pause on discount because that again brings in its own considerations, the cultures and so on. No? So discounts, I'll just talk about it briefly. For a discount to be acceptable for customs purposes, it should be one that's at arm's length. Okay, so if you're a supplier and if you're a company in Uganda and you have a supplier in India or China, and they have given you maybe 5 cases of wine at maybe 1,000, and maybe given because of your prior relationships with the company, they give you a discount which they won't give any other person. That discount for customs will not be acceptable. And that's in line with also the transfer pricing guidelines. So customs and transfer pricing kind of have some kind of relationship. Mm-hmm. So back to the documentation. The first one being the pro forma. Now, once you agree to the price that you have been given in the pro forma, we can go to the commercial invoice. Now, there is something that's very important to consider when it comes to the commercial invoices, and that's the Incoterms. Incoterms basically define the terms of trade with your supplier. Now, most common one being CIF, that is cost, insurance, freight. Now, world over, valuation of customs is based on CIF. That is a primary valuation, value for customs valuation. Now, we then see that like in this case, cost being the cost, the X works cost of the products, that is the cost of the products from the factory of the supplier. The freight being the sea freight from the supplier's border point to Mombasa. And then the insurance being the insurance incurred in the transit. So I think up until some time back, it was fair game for companies to have any insurer for their freight, but now I think a few years back, it was made law that all companies have to use local companies to insure their cargo. So we have to consider that. So I've talked about the pro forma commercial. Now, other documents to consider is now what is used for the transportation. We have the bills of lading. The bill of lading is basically issued by your shipper when they have the goods are moving from the port of landing of the supplier to Mombasa. The bill of lading will state, among other things, the port where the supplier has given the goods, where they are heading, the amounts of the goods which are coming in, and so what have you. Now, obviously, for East African purposes, we'll find that if not the only kind of shipment we use is ocean freight, but you find that there are countries whereby they use railway, they use road transport. So depending on the type of shipment you're using, you could be having a bill of lading for the ocean, then you could be having a railway bill for the people who are using the railways and what have you. So at that point now, the goods have now reached Mombasa. You have your pro forma, you have your commercial, and the different transportation documents. Now, I think Charles mentioned that in case there is any discrepancy on those documents, now the DPC comes in. I've handled cases whereby just a discrepancy in terms of the weight on bills of lading and the commercial invoice is flagged. And then, trust me, and I think Charles can, it becomes very hard for you to explain why there's a difference. Okay? I think, it becomes just that small discrepancy can raise an issue. And like how he has said, the odds of you leaving DPC without a top-up tax is very, very low. You get it? Eh? So it's up, So having understood how the documents move, you have to ensure that there is compliance or conformity in terms of what you're declaring. Now, when the goods have reached Mombasa, you then have to move them from Mombasa to Kampala. Now, yes, at that point, again, there's more documents to look at. There's a T1 that is basically for the transportation of the goods from Mombasa to Kampala. Again, the what's declared on that document should be matching with your other previous documents. Any discrepancy, you go to that yellow channel, as Charles said, for the DPC. Now, when the goods have reached, first again back at Mombasa, because now we have the ACT regime, the single customs territory. When you make your declaration at Mombasa, you then have to look at what regime you're going to consider. Is it the on consumption IM4? Is it the transshipment? Is it the warehousing IM7? All those declarations warrant specific additional considerations. Now, in this case, I'll look at the most common one, the home consumption, right? So you've declared your goods, you've paid the taxes. Now you have to move your goods from Mombasa to Kampala. I'll talk about more of the implications of the documents that lie in that on that particular aspect when I'm talking about the post-clearance audits. But for now, I think I cannot say that there is a single template for all the documents because different transactions warrant different documents. A taxpayer who is engaged in setting up, say, an oil pipeline may have completely different documents compared to a taxpayer who's involved in trading. For example, if you are involved in maybe setting up an oil pipeline, most of your emphasis will be tagged to your contract and the BOQs, because when you're clearing your BOQs, each phase transaction requires different documents. Currently, we have an issue with, we have an ongoing audit with the Revenue Authority, whereby the Revenue Authority is alleging that this taxpayer did not apply for partial shipments of their consignment. Albeit them giving the proper declaration, they never applied for proper partial shipment, and because of that, all the consignments which were declared as machinery are then going to be broken down into material components and declared separately. So, like I said, every taxpayer in their line of business, requires considerations. And for me, I think in my experience, what I've seen with customs, unlike domestic tax, I think customs is not complex. Once you understand the processes, you see, domestic tax is heavily legislated. Customs is more about the processes. Once you understand the processes at every stage, trust me, the degree of non-compliance will reduce heavily. And I think like how Charles and someone says, now bringing in the role of the agents. The agents have been very, very crucial in playing a role in basically bridging that gap between compliance and non-compliance. Just maybe as I conclude, in practice, again, I've seen a scenario by some taxpayers disown agents when it comes to customs. Okay, now Vanessa, you being a very senior counsel, I think you know what we call about the agency principle, agency, right?
Absolutely.
And also notice. Okay, so from a legal perspective, notice implies that if your agent knows something, it's assumed that you also know about it. So just for every viewer out there who is prone to disowning their agent when things become sour, as opposed to you doing that, it's better that you sit down together and then you come up with a better approach as opposed to you disowning each other when it comes to that point. So from a practical standpoint, I can say so many things, but I think for now, I'll first stop there. Thank you, Vanessa.
Yeah, thank you, Stuart. I think highlighting the role of the agents, like Charles mentioned, that you have to have integrity as a clearing agent, as a customs agent, so that you're able to ably represent your client. So while you're selecting, because I know the selection is done on the portal, so you're able to select the agent that you're going to use. So make sure you find someone that has a reputable background and experience. Now, maybe just pulling out from the kind of documentation we need. I think it trickles down into valuation, which is the biggest issue of why the URA exists, to collect taxes, right? So I want to ask Simon, how do you come up with this valuation?
Thank you very much, Vanessa. And that's exactly what we do on a daily basis.
No
And,
doubt.
I want to thank Stuart for that elaborate submission on documentation. Now, being the head of the document center, processing center, I just wanted to add a little something for the traders out there or people watching us. I would like to, what Stuart said, I want to summarize it in just 4 simple words. Documents in international trade are broken down into 4 categories. They are what we call commercial documents. Those are the documents that are related to the purchase of the goods. They include things like a purchase order, pro forma invoice, packing list, and a commercial invoice. The next category of documents, and that's why I wanted to add a little on this, is called financial documents. How did these goods get paid after you finished to purchase them? How did the money move from this country to the next country? So things like telegraphic transfer become important. Things like credit notes become important. Things like sales contracts become important. So the next category is called financial documents. Now, the third category of documents are called logistical documents. What Stuart mentioned, things like shipping documents. Is if it is by air, then we call it the airway bill. If it is by water, that's a bill of lading. If it's by railway, then either a consignment note or something. So they are called logistics document in that category. That's where insurance comes in. You also get the insurance there. Now, the fourth category is called regulatory documents. Regulatory documents are those documents that you must comply with. For example, if you are importing used clothes, the requirement that there is fumigated from the country of export. Those used clothes have been fumigated. So, do you have a fumigation certificate? If you are importing, say, day-old chicks, so regulatory documents will imply import permit for such goods from Ministry of Agriculture. So depending on the product that you're importing into the country, regulatory documents become critical. So in general, those are the breakdown of documents. Now, to the issue of valuation of goods. Valuation of goods is usually a very complex animal, and people sometimes fail to understand what it is. Now, I want to try and simplify it. Valuation of goods means determination of the value of imported goods that are subject to ad valorem tax. Now, ad valorem tax is a tax which is a percentage of the value. Now, there is a tax called a specific duty rate. Now, if the tax subject to is a tax specific in nature, then valuation will not be very necessary. For example, if you're importing fuel, the tax is imposed on the liter, the quantity of liters. So irrespective of how much money you spend to buy that fuel, it will not be of any importance to the taxation of fuel, because the tax is placed on the quantity. We call it a specific duty rate. However, where the tax is a percentage of value, that is where valuation of goods become critical. And so valuation is a process of determining the value of imported goods from one country to the importation country. Now, the value is the price actually paid or payable. Now, we don't need to confuse these words. I mentioned the word valuation is a process, but then the value itself is a price actually paid or payable when the goods are imported from a country of export to the country of importation. Now, if the goods are imported from India to Kenya, okay, you cannot apply that value if goods are coming to Uganda. So that's why it's very critical to note that value is a price actually paid or payable when goods are imported from the country of export to the country of importation. Now, there are two words there which are important to note. There is a price actually paid, then part B is payable. Now, in all the documentations that we have mentioned, you are demonstrating the price actually paid, okay? But then, if that is not a price payable, customs will be able to demonstrate that. And that's why Stuart Wayne was mentioning something called the arm's length. So you can actually have all documentation, but you are not demonstrating the price of those goods at arm's length. So that is why part becomes payable. Then we should be able to establish the actual price payable for that product. So that is where the disputes begin to emerge. I have my documents. Why are you disputing my value? But that's exactly why it's called evaluation process. So, but in a nutshell, valuation is determining the value of these imported goods. Now, the value is the costs that have been incurred to purchase these goods. And at the different stages, you incur different costs. And these costs added together from the country of export constitutes what we call the value of these goods. Now, for the East African community, that value is composed of three components plus adjustments. The first component is the price of goods, is called the cost. The second component is called insurance. And then the third component is called freight. If you are shipping your cargo by air, freight will not be added onto the cost. So it will only be the cost and insurance. Now, there are other adjustments that come into those. For example, if the seller in India hired a broker to look for market, okay, and that cost was not added, that will be added back to the price of the goods. There is what we call inland transport. If you are buying cargo from a particular place in China, and then you're going to take it 300 kilometers to a port where it will be shipped to Mombasa, those are called inland logistics costs. They have to be added back to the price actually payable. But it also boils down to the terms of sale. The terms of sale is usually summarized into what we call international commercial terms. If the invoice is quoting a CIF, that means the cost indicated on that invoice covers for all those other charges, okay? So there is no need to ask for the insurance certificate, no need to ask for the shipping or freight invoice, because that has been catered for within the cost. So the ecoterms become very critical. Say, for example, if in your invoice, the ecoterm is quoted as X works, okay? And then when it comes to customs, you're declaring CIF, okay? So when we check in your documentation and see this is actually X works, then we will reject your documentation. So that is a nutshell about valuation. Now, there are standards or there are methods that have been summarizing as far as how do you determine the value of imported goods. The first one is called the transaction value method. Now, transaction value method, we call it in simple terms method 1. All valuation of cargo must prioritize application of a transaction value method, which is a price or the value declared by the importer and backed up by their own importation documents. So customs must give priority to accept your value if you can defend it, okay? In the event that customs disputes that value, then method 1 may not be applicable. But it's very important to note that method 1 has limitations, okay? It can only be applicable where there is a sale. In circumstances where there is no sale, method 1 will not be applicable. Let's say a donation, goods have been donated to you, so there is no sale. So method 1 cannot be applied. There is also instances where the seller and the buyer are related, okay? So when the buyer and the seller are related and that relationship has affected the price that we are not declaring price at arm's length, then method 1 will not work. Now, how do you determine the relationship between the seller and the buyer? Is either both of them are controlled by the third party, or one of them is controlling the other, or both of them control the third party. Now, when that has been established, then method 1 cannot be applicable, especially when the price quoted in is not at arm's length. Now, arm's length means at the market rate. If Vanessa went also to shop from that shop, will also buy at the same price. Then we will say that even if there is a relationship, it has not affected the price actually paid or payable for these goods. Now, in the event that we fail on method 1, then we move to method 2, which we call the value of identical products. So yes, you have imported iPhone 15, okay? And that is the iPhone 15 that we are considering. And we have identified some of those circumstances I've mentioned, that there was a relationship between the seller and the buyer, or there was no sale. And in that circumstance, we apply the value of another iPhone 15 at the last time when it was imported within the last 90 days. So that if we fail to agree at that level, then we move to the third method, which is the method called the third value for similar products. Now, transaction value, move to identical products. From the identical products, you go to similar goods. Now, similar goods may not necessarily be exactly as the one you're valuing, but they perform the same function. I would typically give 2 examples. For example, if we are valuing geisha soap for bathing, 250 grams, okay? But we have failed to agree on method 1. We have also failed to agree on method 2. Now, we are going to similar products. So we can use a value for Protex basing soap, 250 grams. So that's called the similar goods method, or method 3. Now, if we fail on those 3, then we move the next set of 3 methods of valuation. The first one is called the deductive method. Now, deductive method, in simple terms, or to break it down, is that if you have a product of the similar nature which was imported and is in the market, you begin deducting the costs that were incurred in importing that product, including the taxes, and take it back up to the factory where it was bought from. Is it called a deductive? You deduct taxes, deduct the shipping costs, deduct all those costs until back to the factory where you purchase from, what will that product be? And then you are able to arrive at the value. Now, if method 4 fails, you move to method 5, which is called the computed method of determining the value of imported goods. Now, the computed method is you compute the cost that are associated with the production of that product and make a markup in terms of profit. Then you are able to determine that, okay, this product is involved in production the following raw materials. The cost of these raw materials is this. you move to the labor, you move to the other things, electricity, water, and every other thing, until you are able to arrive at the unity cost of a complete product. Put a markup for a profit, and then you're able to determine the price or the value of that item. If all those have failed, then we go to the last method, which is called the fallback method. Now, the fallback method is the one that involves research in that sector, okay? The researched data about that product and the sector. And then it will, that value, if we have reached that level, then that has to be the value of customs. There is no more method beyond that one. So in a nutshell, that is the stages that are involved in determining the value of imported goods. And it's a complex process. It's our preoccupation in the document processing center. Everything we do is to make sure we detect whatever cost that may have been left behind and has affected the price actually paid or payable. And then we are able to make a decision for you. Thank you.
Thank you, Simon. Now, there's been a public outcry about importation of cars. Yeah. And I'd be kidding myself if I didn't comment about the testimony, much as case. Yeah. So you've mentioned I have my invoice, I have my documentation. Yeah. The exporters are readily available to avail any information. There's a whole website and they are very fast in responding to any queries. So I have everything in line. I have my Incoterms, all the terms that Stuart mentioned. Everything is clear to the dot. Why am I not then assessed based off the transaction value method?
Okay. Thank you very much. That has been a very popular issue, but it's a simple issue. Used motor vehicles, determining a value of used motor vehicles fails method one, because you cannot ascertain the value of use for that vehicle. You cannot ascertain the value of non-use for that vehicle for a particular time after it was registered in the previous country. Now, because of that, within the East African community under section 122, I think paragraph 5, the Secretariat reserves the right to guide on such issues where method one may not be applicable. You may have bought your car, Range Rover, whatever the case is, and it's a used car, but the value to compute that value of what was used when that car rolled off from the factory is very complex and not easily sustainable. So for that reason, that's why we use what we call the method 6 fallback method to determine the value of used cars. And this is backed up by the ruling of the ESC Secretariat, and that was around 2013. And that ruling has been existing, that guided on how such items such as used clothes, used cars, used articles can be valued when they're imported within the country. So basically, that's why you will say that URA, you do not accept our documents. No, we will look at them, but then when we ask you to ascertain the value of use for that car, RAV4, a 2014 car, okay, we ask you to determine the value of use from the first day that car rolled off the factory to 2014 when you are purchasing it. We say, okay, ascertain that one might be very difficult, you know. So that is why the fallback method becomes more practical in determining the value of such used articles. So it's not only cars. We also have used clothes. We also have used machinery. We also have other used articles, you know. So basically, that is where we find all these are, by the way, founded in the law. Is there in the law, you know. So it's very critical for our viewers out there to learn and appreciate that, yes, you have your documents, but what you are dealing in is a used article. Is it the vehicle got an engine knock, that's why you're selling off? Is it because it got scratches, that's why you're selling off? Is it because you have got a new one, so you are disposing of this one? Is it because, you know, so those circumstances cannot be ascertained in terms of value for us to say this is the value of this product at that state. So that's how we determine the value of used motor vehicles, and we have made it very simpler by
Simpler
by
and more
publishing
expensive.
and making it more accessible for everyone who intends to import a used motor vehicle. Thank you very much.
Alright.
But the new vehicles, we value them using a transaction value method. New vehicles, we apply method 1.
But not majority of Ugandans can afford the new cars. So I saw
That's
Stuart nodding. I don't know if you have a comment.
It would be wrong of me not to comment from a consultant perspective, but I think if I'm to comment about testimony motors, and if you look at the different rulings from tribunal, High Court, Court of Appeal, and I think right now actually we're waiting for Supreme Court ruling. So I don't know, but okay. Given that the tribunal and the different courts have applied the same ruling, we wait to see. But if you look at what the court judgments talk about, most of them, in fact, if not all, are saying that URA did not demonstrate why they moved from the first method to the last method. I think one of the rulings, I think that was the first ruling, I think they went on further and said, why didn't URA at some point consider similar or identical goods? Okay. Now, if we are to go back to why URA used these indicative values for vehicles, I think at the time before they began using that method, there was so much fraud. Okay. So the truth of the fact is that there was need to regulate that industry, because Vanessa, tomorrow you would go to Japan and buy your car of $10,000. For all you know, you come to NASA and make an invoice of $4,000. There is no way someone at URA will doubt you. So the truth of the matter is, in as much as it hurts, but there was a gap. Okay, there was so much unregulated business going on. Now, I think just with the devil's advocates, I think in trying to break even, I think also where URA and the different authorities in East Africa have gone wrong, they have delayed in providing proper legislation for what they are doing. In case they have proper legislation, and I think because when it comes to the IACMA, it has to be at the East African level to amend. Okay,
Yeah.
so I think the longer they delay in amending, I think is the more the issue gets worse. I think, Vanessa, if you remember the issue of domestic VAT, I think you're looking at a similar thing. Okay, because if tomorrow we get a Supreme Court ruling saying that actually URA is wrong, then what stops a sharp lawyer in Kampala raising a class action suit against URA? Okay, because at that point, all taxes raised before will be now collectible. You get it, eh? So for me, I think just to be the devil's advocate, I understand where you're coming from. Trust me, even if tomorrow any of us, when the private practice become the Commissioner of Customs, that issue won't stop, because the moment it is ruled that the price payable is the actual value of the used motor vehicles, we shall triple the number of cars driving in Kampala. Okay, unless now if that is the case, and they are saying that okay, that is not the price payable, now just to regulate that sector, now it will be then to reduce the number of years that vehicles can be imported under, because I think right now is it at 10?
15.
Yeah, 15 years. Yeah. If you go to Kenya, it's much less. Okay, because also Kenya has a similar regime, but the number of years for used motor vehicles is much less. Okay, so for me, I think in practice, what URA is doing is correct. Okay, however, finding a legal framework where it fits is a problem. And the longer they take to find that legal framework is the more they are risking a severe class action suit from a sharp city lawyer once the Supreme Court ruling is delivered, which in my case, I think won't really differ from the other court ruling that they've received. Yeah.
So, Stuart, just to re-echo, the Constitution, tax must be imposed
by statute. By statute.
So it has to be legal. But anyway,
it's
not my place today.
Yeah, because that can be like a 1-hour session about that.
Absolutely.
Can talk about
But
that,
I think the EAC Secretary's administrative ruling on the matter is anchored on the law, on the ACMA itself under section 122. Is provided for. And so when that ruling was made available, then it actually became now legal, became part of the law, part of the ECMA, part of the process of determining value of imported used articles. So again, I think like Stuart, you mentioned, it would have been maybe something to do is to mainstream it into the act itself.
Yeah.
And I think that's what you're speaking to. And I think it's a good idea.
And I think just to give you some insight to why I'm saying to mainstream it, if you look at the most recent tax bills, infrastructure levy actually hasn't been having a legal framework.
Yeah.
But actually, the company has been paying it, but there's been no legal framework for levy. I think at some point it was in a Finance Act, but I think when it was repealed, then there was a gray area for it. So I think it's just to find the proper framework. Now, question is, Vanessa, me and you know that in tax law, amendments are not retrospective unless it is mentioned.
Yeah.
Now, even if tomorrow we have that proper legal framework, what happens to all the taxes that URA has been collecting prior? So again, there's also that gap. So do we assume that because now we have an amendment, all the past crimes are forgotten? Exactly. So again, there is so many moving parts to consider as well. Yeah.
Yeah. All right. Okay, so thank you all for that thought-provoking discussion. Just to now get back to how taxes are calculated, Stuart. Yeah. Once that we've established the valuation that is ably discussed, what taxes should people expect to pay when they import stuff?
Okay. Yeah. So when it comes to the taxes paid at importation, we have import duty, we have VAT, we have withholding tax, we have excise duty on if your item is excisable. And the levy which we also discussed before, and also if you're bringing in a vehicle, that levy, environmental levy. Now, for the computation, I'll begin from import duty. Now, import duty is basically you get your CIF times the duty rate. The rate is basically found in the CET. The CET is basically like it's the customs bible for classifying any and everything. I can ably say that there is nothing you can import into Uganda that can be fitted in that book. It's impossible. So I don't know, because I think it's been evolving for almost, I think now, centuries almost. Okay, so for you to import something which doesn't fit in that framework, unless you have invented something which is new. But so for import duty, CIF times the duty rate, you get your import duty. Now we move on to VAT. VAT, we get the CIF plus the duty rate. We get that, then we multiply by the VAT rate, which is 18%, and that is also provided for in the VAT Act as well. Now we're going to the infrastructure levy. It's a flat 1.5%. We're going to the environmental levy, that one is the vehicles, depending on the number of years. Also, there's a particular rate for that one. And then for WHT, again, it is fixed, the normal 6%. Now, I've had in practice some once I had an issue with the URL, which I found very interesting. There was a query that someone in domestic taxes had raised, saying that why haven't you withheld on a payment made to your supplier of imported goods? You get it? You have already paid the taxes, you've already withheld to custom, but this person wanted them to withhold on a payment made to their supplier. So why I'm saying that is that for customs, there is no need to withhold on your supplier of goods, because you've already remitted that particular tax at customs. Now, it becomes interesting when you have a mixture. You have goods coming, there is part goods, part services. Okay? So, for example, you are importing machinery, which involves some professional services for installation. And for you're saying that out of your invoice of 100 million, you've already computed withholding tax at customs. I think, Vanessa, you had those issues that now, where is the taxing point for withholding tax? Do you assume that because you've already paid all the taxes at customs, it doesn't apply? And I think why that's very, very pertinent is because we do not have what we call we don't have in the mixture supply rule, which is in VAT, whereby something can be if you have goods and coming in with the services, this kind of, but for income tax and customs, that particular rule is not there. So in practice, I've seen that actually at times URA can applies a percentage. If, say, for example, the percentage of your goods is at 90%, and the other part for the services is just 10%, they'll just consider the whole invoice as goods, and also vice versa. That's on a case by case scenario. So in terms of the taxes computed, like I said, import duty, VAT, excise, infrastructure levy, and the environmental levy. Basically, those are the taxes, the main taxes, and also excise duty depending on the rate which is used under domestic tax. So those are the basic taxes. Now, out of those taxes, there are some which are claimable and unclaimable. So the ones which are claimable is basically the WHT and the VAT. All the others form part of your cost, which is then used to compute the cost of your inventory in your financial in your books of account, basically. Yeah.
All right, thank you, Stuart. Just to bring in Charles, usually people want exemptions, right? So Stuart has ably told us the tax obligations ordinarily, but are there any exemptions that exist for importers?
Yeah, thank you, Vanessa. Yes, there are exemptions, and most of those exemptions are covered within the law. So you don't just wake up and get an exemption. For instance, if I may mention, raw materials, we have an exemption, and they will be specifically indicated in the Customs Management Act, and also the condition. Because if you have to benefit from certain exemptions, then you have to fulfill certain obligations. You are a manufacturer, you have a factory, you have been paying taxes, you have records. And it is proved that the raw materials you are bringing are for
Manufacture.
but not for
Sale.
not for sale. Then second, before I proceed, there are used to be general exemptions, including like for vehicles for government, but that was stopped. Currently, the government budgets for its importation. If a government imports without making a provision for those cars, they can be held by him. Yeah.
Government holding governments.
Yes. So other exemptions would be for things like drugs or agricultural inputs. All those you have to demonstrate. Then there are also exemptions for diplomatic cargo. Those ones, I think you have to have again documents. You have to get a letter, a document, a form from Minister of Foreign Affairs in order for you to qualify for exemptions. So most of these exemptions are conditional. You must fulfill certain obligations in order for you to get the exemptions. There has been an outcry that there are so many exemptions. So I think that is an area that maybe requires some review, because it may not create a leveled ground. It may depend on who you are. Whom do you know in finance? You might go there and they give you an exemption. So I think there is a need to revamp the whole exemption process so that, first of all, it should be fair, should be applied uniformly, and it should not be discriminative.
No.
So I think that's what I can say in a nutshell.
Maybe I just chip in a little from taxes payable. I just wanted to highlight a component of excise duty in the computation of taxes, it follows a particular formula. There is always a mistake to skip that formula. If the product is subject to excise duty and it's an imported product, you start by computing the import duty. Next, you compute the excise duty. Now, the excise duty, you have to add the import duty back to the cost of the goods. Then you compute the excise duty. Now, after you finish computing the excise duty, that's when you move now to compute the VAT. So you have to add the excise duty you have computed, add the import duty you computed back to the original value of the goods, then you apply the 18%. Then you go to the rest. It's always very important because there has always been people saying the taxes are too high. It's because the way it comes. Now, about the aspect of exemptions, for things that are imported into the country, they are basically broadly divided into two categories. They are what we call specific exemptions, and then they are what we call general exemptions. Now, specific exemptions are exemptions that are tied to the individual, a beneficiary. Say, for example, the president, say for the foreign missions, the foreign governments, the disabled, the rally driver, the international agencies with the bilateral agreement. Now, that is called specific exemption. It is tied to the person. So whatever that person imports will be exempted because of their immunities. Now, there is what we call general exemptions. Now, general exemptions, everyone can qualify for general exemption as long as the product you're importing is exempt. Say, for example, personal effects. So if you have been out of the country for more than 12 months, you can return with everything you owned in that country and have been using, including a motor vehicle, and you bring it free of charge without paying taxes. Like Charles mentioned, there are conditions you have to fulfill. You are going to engage in a hotel construction or you're going to run a hotel. And then there are particular products that are mentioned there that you can use for construction of a hotel. And as long as you are accredited a hotel or you can be verified, you can qualify for those exemptions. The hospital, laboratory, okay? The consumables for the laboratory, they are mentioned there within the law. A tour vehicle, you are a tour operator, you have been verified and confirmed to be a tour operator, and you're importing a vehicle for tour operations, you can also benefit from general exemption. The only thing is that they have well laid down conditions for you to fulfill. For example, a tour vehicle must be of a particular type and must be in a particular way. It must be, if your vehicle does not fit there, then you will not qualify. And it's well defined in the law what that vehicle must fulfill in order for it to be exempted for being a tour. Then there are conditions that are put on it. If you enjoy those exemptions, they are not transferable. So if now you are moving it from a non-exempt person or non-exempt purpose, then the taxes at importation will be applicable at that stage. I just need to make that additional rejoinder. Thank you.
All right. Thank you, Simon, for that clarity. I just want to ask, recently, URA issued a public notice on groupage clearance. Could you explain to us how the groupage consignment model works and how does URA facilitate this clearance?
Okay, thank you very much again for bringing this issue up. Groupage clearance, there was a misunderstanding that the guidelines issued by URA was banning the importation of cargo in a groupage arrangement, but that's not true. We are simply streamlining clearance of groupage cargo. So what is groupage cargo? Groupage cargo means 10 or 5 people who have imported their small quantities of cargo, combining to ship that cargo to Uganda in one box or in one container. Now, what has been happening is that the shipper will not issue a bill of lading for each one of you because you are in that container. The shipper will only issue a bill of lading for one person. So now, if we have 5 people in that container, we have to choose among ourselves in whose name the bill of lading will be issued for that cargo to move from the other country to come to Uganda. So what has been happening is that those container leaders would own up your cargo, okay, and collect taxes from you that your portion of cargo is 20 million. Your portion of cargo is 30 million. For you, your portion of cargo is 30 million, okay? They collect that money from you and then they pay maybe 10 million, which is actually the actual taxes for the entire consignment. And then they will be demanding you more money and you cannot verify because the cargo is cleared in their name. And so there was a lot of outcry that came from affected traders. And we had to go down to investigate what was actually happening. And we realized that people would go and ship cargo either in pseudonyms, which cannot be verified, and then go to the people, collect the money from them, or clear the cargo from URA and take to their private warehouses. So you can't access your cargo. It's kept in somebody else's warehouse until you give this person money in the name of taxes. Now people would come to URA looking for their goods and we couldn't find it. So groupage cargo shipment internationally is a model of moving cargo from one territory to another because you leverage on costs of shipping. You cannot, Charles here is a logistics manager. It's an average of about $3,000 to bring a 1x40 container from Mombasa up to Kampala. Then you add another about $3,000 for shipping that cargo from China up to Mombasa. So that's about $6,000. So you alone with maybe a small volume of cargo which cannot fit the container, you will find that very expensive. But if you are 6 people, you leverage on the numbers and cut down on that cost. That's why groupage cargo becomes very critical and supports very many small-scale traders. Now, what URA said is that once that cargo reaches here in Kampala, please let you hand over the portions for each person to them so that they clear their taxes themselves. Now, that has benefits because you, the trader, you get to know exactly how much taxes have been applicable for your product. I'll give you a typical example. Cameras don't pay taxes, nil tax. Solar panels don't pay taxes, nil when you import them. Now, the container leaders will charge you taxes for solar, will also charge you taxes for these CCTV cameras. But in our tax laws, they are free. This is a facilitative arrangement for people to go into alternative source of energy and also for security. So cameras, we waive the taxes for cameras, but they will charge you. If you have imported the cameras and you are putting a groupage container, it comes, the container leader will come to you demanding taxes for your cameras, and yet actually taxes are nil. So with this a new streamlining arrangement that URA is putting, that has now come forced to enforce, is that once you reach Kampala, give Vanessa her portion of cargo. Vanessa will declare herself and then be able to, one, confirm that I am an importer. So for tomorrow's, maybe next end of financial year, you need to file your income tax returns. Then you're able to claim your withholding tax that was earlier on paid at importation. You are able to get your tax credits for VAT, but these people would enjoy all these benefits and could not be verifiable. So we have not banned the groupage cargo, but the process involves, once the cargo reach here, give everybody a house bill. The house bill means I am handing this cargo, it was in my name, I am surrendering the ownership to you, this person. And then that person will be able to declare and pay their own taxes without going through the third party. That is then the crux of what that initiative is focusing on, to support small-scale traders to enjoy the benefits of importing in their own name without being taken advantage of. Yeah.
All right. As we come to a close, I just want to ask Charles, being that you interface with importers, what has been their experience with the groupage consignment? Has it improved? Have the processes been streamlined like Simon states?
Thank you, Vanessa. It has been a very controversial and disturbing matter. And as industry leaders, of course, the importers, the agents, they always come to us for see whether we can get a way forward. And like you have said, we have had a number of meetings with URA about how to manage it. But what I would imagine, one of the causes when we try to study is the nature of our importers, the level of knowledge about importation. What is required to import? Somebody goes to China, picks things everywhere, and then they collect 5 of them, put it in a container, and get on the plane and come back to Kampala. And they are waiting for their cargo. They have not provided documents. They have not provided evidence of payment. For them, they want their cargo here. And that's why, Simon, that's why the issue of somebody paying taxes and taking them to their store, that was the arrangement. Somebody will say, I don't want to know what happens. But later on, as time went on, you bring in a cargo, taxes are paid, you don't have evidence of paying taxes, then the cargo that you have brought, you have to sell it, and there is the VAT issue. There is the withholding butter, but you have nothing. So as now traders start waking up, that's why now the consolidators themselves have to put to task to account, and again also him as a tax collector. These consolidators, I think, we are really getting a lot of money from the clients. And I mean, we are taking advantage of the ignorance of most of our importers. But now that URA has come into streamline, if a trader leaves Kampala to go to either Dubai or China, they will insist, I want my documents, they should be in my names. If I pay, I should have evidence of payment. So basically, that's the challenge that our traders have been. And again, these are small people with no background. That's why they have been suffering. And the consolidators, the leaders, instead of helping, they were actually taking advantage and squeezing them. So to me, this could be a good solution for those brothers and sisters of ours.
All right. Thank you. Thank you so much, Charles. So we would love to have this conversation for longer, but we'd have to come to a close. Thank you so much, Stuart, Charles, Simon, for making the time to create awareness. Yeah, we've discussed pertinent issues of customs. At the heart of this, there's a lot of information to do with documentation, understanding the processes under customs that we must take keen consideration of. And whereas we'll continue to have episodes about this due to how big this topic is, we would have to bring this to a close now. Thank you for tuning in, our dear viewers. Please subscribe, like, share. Until next time, stay blessed.